Today we're going to take a closer look at an e-commerce favorite that is going to be Shopify. Unfortunately for investors, the stock price is down roughly 79% from its 52-week high. On today's episode, I want to discuss two things. First, 4 reasons why to hate the stock right now. But my favorite thing about today's episode is taking a closer look at 2 reasons why I enjoy Shopify right now. So let's get started.
I do want to thank The Motley Fool for sponsoring this video, and make sure to check out fool.com/Jose to get the top 10 stocks to buy right now.
So first, let's start off with price action. I do want to say the overall market has been very volatile with big green days and also big red days. Today seems to be a big green day where we have Shopify up roughly 6.7% as I am recording today's episode. But we can see in the past month, the stock is down roughly 7%. And the reason I want to show both the daily and the monthly is I wanted to show how the overall volatility has been in the past 30 days. So the first reason to hate Shopify right now is the overall macroeconomics. This is something they mentioned on their most recent earnings, which were on July 27th of 2022. So a little bit over a month ago. And they do mention because they are seeing huge strength in the United States dollars, it is affecting kind of currency exchange rates and kind of damping the overall revenue growth for this company a bit. Other macroeconomic events like high inflations and higher interest rates are also kind of pushing aside the overall consumer market a bit and how consumers are spending their money. So in their most recent earnings, they did show a revenue growth of roughly 16% year over year, and this is one of the slowest this company has ever shown. I do want to say these macroeconomic events are pushing some of the other reasons. A perfect example here was on late July as well. Management mentioned that they are reducing Shopify's workforce by roughly 10%. The main reason is during COVID, they saw a huge gap up in e-commerce demand, and they did believe that even though that e-commerce demand might have pulled back, it wasn't going to pull back to the extent it actually did. And we can see a huge pullback in the overall e-commerce market. So they kind of overhired, and now they were spending too much money on personnel that they had to cut back on some. So this could be seen like a bad move from management. And I do want to say Shopify is not the only one that has done this mistake. Amazon, an e-commerce giant, did similar things. They actually had to close down a few facilities, a few warehouses, and kind of abandon plans to build even more warehouse because of the slowdown right now in the e-commerce market. We also see C Limited with Shopee pulling out of certain countries because of the slowdown. So I do want to say, yes, it was a bad move by management, but Shopify's management wasn't the only one that made this mistake. If you made it this far and you are enjoying the episode, make sure to hit the thumbs up as it does help me grow my overall audience. If you want to support a little bit more, make sure to subscribe using my link at fool.com/Jose. If you want to learn about the semiconductor market, make sure to check out my newsletter. The link is down on the pinned comment. The third reason is the most recent reason I want to say, and this happened on September 8th of 2022 when Shopify announced huge leadership changes. For example, the COO of Shopify has stepped down. They do have a new replacement, which was internal, and they are also seeing a shift of CFO. So the current CFO, Amy Shapiro, will be stepping down on October 27th of 2022, and a new CFO, Jeff Hoffmeister from Morgan Stanley, will be appointed during that time. So obviously you don't want to see management change, especially during crazy times when you're having reorganizations and reducing workforce by 10%, when you're also seeing kind of a huge shift in your overall revenue growth. It just kind of leaves a bad taste to investors' mouth. The fourth reason to not like Shopify, I want to say, is this is a company that's investing a lot of money in where some investors might not like it. For example, Shopify is investing roughly $2.1 billion in the acquisition of Deliverr, which is already complete. But this acquisition is going to help the company's global logistics, which again, some investors might not like this direction, but others might. And they just want to show that, hey, during bad times, this is the time when the company should be saving money opposed to using that money and kind of deteriorating its overall balance sheet. I do want to say in forms of the company's balance sheet, they do have a nice amount of cash and short-term investments, roughly $7 billion, about $900 million in total long-term debt, and are positive in cash flow from operations. I do believe cash flow from operations will continue to deteriorate at least for the next few quarters, but as they start to reduce their workforce and they no longer need to pay things like severance, we might see an improvement on cash flow from operations later on this year or maybe beginning of next year. Another thing I do want to mention is this company has increased their overall diluted shares a nice amount. We can see right now it's sitting at about 1.26 billion shares. And if we normalize it, in the past 3 years, it has actually grown by roughly 11.6%. I think this kind of shows a good representation of that share dilution. In the past 3 years, Shopify's revenue in trailing 12 months has grown roughly 253%. But if you actually take a closer look at revenue per share, it has only grown roughly 209%. And we can see how that kind of gap starts to spread up a little bit, especially right here at the end of 2021 and at the beginning of 2022. So these are my reasons to hate Shopify. I do want to say I am an investor, and the next 2 reasons that I have are probably the main reasons why I enjoy the company and continue to hold. Actually, maybe 3. The first reason is the overall company's balance sheet, right? Their overall financial health is pretty strong, and they are able to focus on overall growth still because they have plenty of cash at hand and very low debt. I do want to say, as an investor, one thing we have to take a closer look at is this balance sheet, and every quarter make sure if it is deteriorating, it's not deteriorating at a rapid pace. The next reason why I really enjoy Shopify is I am a huge believer of the e-commerce market, and I do believe a lot of the pain that we're seeing right now is short-term lived. E-commerce market is still expected to grow, maybe not at the fast pace as we kind of saw during COVID, but this is a market that I can't see getting smaller, or I can't see not growing in the future. So long term of things, Shopify has a market that is growing, and they're going to be able to either grow by staying the same amount of market share or just overall grow their market share. So there's plenty of opportunities for this company. Third reason I want to say is this is a company that continues to innovate or release new products. For example, on August 21st, Shopify Capital, which is kind of their fintech or lending products, launched in Australia ahead of peak sales seasons. They also continue to release other products. Recently on August 16th, they introduced Shopify Collabs. On July 20th, they partnered up with YouTube to kind of bring Shopify and YouTube together to the creator economy. They also have Shopify Editions, Shopify with Spotify, and the overall kind of logistics move, I personally think is a great move for the company, especially for all the solutions it hits. So overall, I am excited for the overall future growth. And again, I do understand the risk that the company is seeing right now. Obviously, I mentioned them earlier on in today's episode, but even with those risks, I do believe Shopify has the opportunity to be a strong winner.